Good morning, everybody. Mike Vacchi, Princetontrader.com, here with your Thursday, rather. We're headed for the weekend. Thursday morning pre-market webcast. Okay, looking at the daily chart, you can see we've talked about compression this week in the area, Bollinger Band compression. You see the red line there, the 50-day exponential moving average, the 100-day there, the yellow line, as well as the daily mid-band, the green line, and the 9-day simple, the blue line. You can see over the course of the past couple of days, especially yesterday, those areas have acted as resistance. And what you're seeing now, especially after the Fed, in the time period after the Fed, the bulls have had issues getting through 58 and change all week. You can see it. You can see it back here, and you saw it again yesterday. You can see how weekly pivot after the Fed rejected there. The pre-FOMC print price was 26.50. It retested that area from underneath and made an hourly high, made a high on all time frames pretty much, and then failed. That's taken us down near where we are now. It printed in the low 20s during yesterday's RTH. It drifted back up to test both the daily pivot and the monthly pivot, 36 to 38, and it rejected that earlier this morning, and we've come down to break yesterday's low, and we're now trading right at around 26.20. So if we're going to head lower and start a lower band ride, then the bears are, we're in sell rallies mode certainly because of our proximity to the daily mid band. We're so far below all of those areas. The bears would need to print the round number 2600 or better today to engage that lower band. Not out of the realm of reality considering we've traded as low as 2617 in the overnight. Very doable. What the bulls need to do is they need to find a low that they like. They need to build off of it. Basically one tick at a time, find some higher lows, and then the next time they get back up to daily pivot and monthly pivot, they need to convert it. If they can convert it, then you get a test of 50. But what you see here is just a consistent inability by the bulls to perform when the market has given them opportunities to convert both the weekly pivot up in the 57s as well as the daily midband. That was on the table yesterday pretty clearly mid-morning and certainly after the Fed. When one side or the other fails to execute on stuff like that, then you see what we see here, which is price tends to push in the other direction. So don't give the bears too much credit. There's still plenty of ways for them to screw this all up, but we are sell rallies until we start to see some higher lows and some build and some conversion of current resistant areas that need to turn into support. All right, everybody have a fantastic day. We'll be out later on social. I will talk to everybody then. Trade them well. Follow us over on Twitter, Instagram, and Snapchat at Princeton Trader. Check us out on Facebook and join us for a free trial at www.princetontrader.com. Trade them well.